Okay, let's get into these stock charts. We're going to use technical analysis in this channel, really to find our trades. And so I'm going to get right into the market indices. We've got major earnings coming out next week in the large cap tech stocks. So next week's a real pivotal week in terms of these heavily weighted mega cap stocks have the, they really can move the market around. Just they're such large companies and they're such heavily weighted within the indices that next week's really important. So I don't expect a whole lot to happen before then, but here's what I see right now on the triple Qs. This is 40% of this ETF here is Microsoft and Apple, and those report next week. So in general, we really need to wait till next week to see what's going to happen. But on the daily chart, we broke this bearish rising wedge right here. We've got a couple breakdowns, and let me go ahead and point those out. Basically, from the March 2020 lows right here, this is an uptrend, right? We've been in an uptrend, and recently, as that uptrend continued to extend, it started to build negative divergence. So this was all negative divergent highs. This was another negative divergent high right here, and then recently that was a divergent high. We broke the trend right there. There's your sell signal. That's the break of the original trend or the main trend. And then we put in a secondary trend that was back testing that broken trend line. So here's the full back test one, and we then broke the secondary trend. As I zoom in right there, there's another sell signal. And we're just kind of creeping up over the last 4 days into earnings. So what I think is likely going to happen now that I see, how it's played out over the last couple of days is they're going to pop this thing into earnings. I think it's likely. We're going to grind sideways, kind of grind higher basically. We're going to pop into earnings and somewhere right up in here once we get those earnings reports. And then likely we're going to sell off from up there. Why do I think we're going to sell off from up there? Well, it's these negative divergences that have been building for quite a while. Indicate that this rally is about to be reversed, or we're going to get a trend reversal, a major trend reversal. But we don't see it yet, but we do have a sell signal here and we do have a sell signal here. So we've broken the major trends. We have no major uptrend right now, except for the fact that if you took away any kind of trend lines, you're obviously making higher highs and higher lows. So clearly there's an uptrend in the larger picture, but I'm looking for the entry point on when that trend is going to change. And I think a very low risk objective entry point would be on a back test of this broken trend line up here. And that's right around 368, 70, somewhere right in there. It depends on when we actually do it. So we'll need to wait for earnings. But I think this could be the high water mark after earnings. And then we're likely to see, a downtrend from here on out. Looking at the SPY, the SPY has a more clear uptrend coming off the March 2020 lows. I've got it marked in green here on this daily chart. You can see all the times we held support. There's one, there's a support. We finally broke support basically right in here. My trend line might be off actually slightly. Probably could adjust that just a little bit. Let me grab the right tool. You can see here. Okay, there, I adjusted it. So basically, looking at the daily chart, we broke trend right there. There's your sell signal. Let me kind of mark that out. That's the original break of the trend right in there on that candle. And we then, had some more selling, but then we've been back testing. And you can see we haven't been able to recover the broken trend. We've just been back testing and kind of trading sideways right now. So again, depending on what happens in the earnings, we might have one more move higher, do another back test, and then fail. I'm interested in shorting up at the back test of the trend line. So I want to short when or if we get up here. I don't know if we'll get up there, but if we do, I want to take a short. I think that's a better risk reward than going long at this point in time. And so that's what I'm looking for. Again, those tech earnings are going to really be pivotal in where where the S&P 500 goes. But the point is, these negative divergences that have been building and recently just extended are still intact. So they're telling you that each time you get a new high, you're likely going to have a trend reversal. And we don't know exactly which new high is going to be the major trend reversal, but each time you get to that new high, when you have negative divergence, there's a higher probability that you're going to have a sell-off than you're going to continue on higher from that new high. So that's what I'm looking for. When or if we get a new high, that's an objective area to short. You have a higher probability of making money shorting up there at that new high on a back test of this broken resistance with this negative divergence for the market to move down from there. And I don't cover small caps too often because they, for the most part, move with the large caps. But the bigger picture on the small caps, March 2020 lows, here's your uptrend line there. Up here at the highs, we started to build negative divergence. So that remains, and if we get new highs, they're going to be divergent highs. But really since last February, we've done nothing but we've just gone sideways. All right. So just a big sideways range. It's, down at the lows, buyers step in, at the highs, sellers step in, and we're just chopping sideways. So no real trending action, just a sideways range. And until we see a change of that range, you could obviously trade the range, go long at the lows, sell at the highs until that changes. The negative divergence that's intact, maybe that's just playing out for this sideways consolidation and then we're going to break to the highs and continue on higher. That's possible, but until you see something, I'm going to go with the negative divergences telling me that we're likely going to break to the downside. I'm not interested in shorting until we break out of these ranges, though, which, really the bottom of the range, I think, is all the way down here, down at, it's about 205.30, I think. A break to the bottom of that range, and we're likely starting a new downtrend. And then the top of the range is about 233.50. And right now we're sitting in the middle. Okay, so Apple, a couple things that look pretty suspicious to me. One, we do have a breakout above the former highs. So there's your former highs sitting about 144.65. We broke out. We kind of came back in and looked like a false breakout, but we're holding above that now. So I would say that's a breakout. We have a breakout above the former all-time new highs. But a couple things about this breakout that would keep me from wanting to go long this breakout. One is you've got earnings coming up on next Tuesday, I believe. Yeah, so earnings next Tuesday. So a breakout right before earnings, it's kind of a gamble, to take a breakout right before earnings. I mean, our institutions, big institutions stepping in and buying right before earnings, typically not. Typically, they're going to wait for that earnings, that event to get out of the way, to clear out so that they can take a lower risk position without risk of some sort of a bad earnings or whatever. And then the other thing is we have negative divergence that is intact. It's confirmed and intact. So on the PPO and the RSI, we have negative divergence. So that means this is not an area I'd want to go long. I wouldn't want to take this breakout long. I think there's a higher probability that we fail and have a sell-off event. I don't know if it'll happen the day of earnings. We might pop on earnings and then sell off. That might be the high water mark. We'll have to wait and see the price action. But the probability looks to be, favoring the downside just with the technical charts, just with the setup, with the negative divergence right before earnings on a breakout. So things to watch on that. And then Amazon has virtually the same chart. You've got a breakout right here. You've got a back test. And so far you're holding that breakout. So price actions, that's bullish. I mean, and same with Apple. The price action's bullish, but it's a breakout that's occurring right before earnings with negative divergence in play. So that's not a breakout I'd want to take. I'd want to wait at least till after earnings to see what this wants to do. Give it a day after earnings and see where the price action's at that point in time. That'll likely give you the next direction, tradable trend in these. And so we need to wait for that. Okay, let's talk about a couple short trade ideas that still look like good trades. BlackRock, BLK, coming off your March 2020 lows on the daily chart. There's your uptrend. That's your bullish trend. Up at the highs, we had bearish rising wedge, which is a bearish pattern telling you you're likely going to start to reverse trend. And we also built negative divergence here at the highs. See the momentum? It's just dropping off, and we kept making new highs in price, but the momentum is dropping, telling us we're likely going to reverse trend. We then look for a break of trendline support, which came right there, especially on this gap down, clear break of trendline support. The following day, they ran it up, back tested the trend line, and so far we're failing and still being rejected by that trend line. So ultimately, I think we go lower. Whether we back test some more, I don't know. But I think we do this and head down over time, at least at a minimum 790.21 as a minimum level of support. Probably lower, but at least down there. And from where we're at right now, that's a move of about 8 to 10%. I think there's likely a lot, some lower prices. I can see a level of support right here as well. Looks like we've got another level right there at 671.17 or so. So that trade still looks good as a short. I don't see any reason to get out of that one. And so we'll let that one continue to play out. AEO, I talked about this one yesterday and what I was looking for. So far, it looks like we had a false break higher. So a couple things to look for on the daily chart. Here's your uptrend line on the daily. Up at the highs, negative divergence. This is just the case, I'm just trying to build the case for a short trade. A lot of people just don't want to short. They want to short only when the market sells off and it's plunging. That's where they want to short. And when the market's moving higher, they continue to remain bullish. But again, the charts tell me we're about to reverse, and I want to position short at the beginning of a reversal of trend, right? I don't want to position short after the trend is obviously down and we're sold off a bunch. I want to position short in an uptrend right when it's about to reverse trend, all right? And if you can find that pivot point, that's the lowest risk area, and that's what I'm trying to point out. So here's your uptrend. At the highs, we had negative divergence right here. So there's your negative divergence building, and you wait for the break of trend. And as I zoom in, there's a sell signal right there. Nice clean break of trend. They popped it back into resistance. Really what I'm looking at yesterday, you can see they popped it back above support, and yet they closed it down at support, but it was a reversal doji candlestick, and today they're selling it down back below support. The day's not over. We need to see where the day closes, but if we do close back below this trend line here, then we're going to have to count this as a reversal doji right there with confirmation on that one, and back below the trend line support. So in general, that would be bearish, and that would likely tell me that this was just a quick move, stop raid kind of move, and we're now going to head lower over time. Heading down to 30.67, looks like some decent support, and we have another level down here at about 26. So, you get down to these levels of support, you probably bounce, rally a little bit, and then roll down to the next level, you bounce. So that's how we're going to trade it. All right, so I'm still short this one. This looks good. We'll see how the day closes out. Okay, this is another interesting trade idea, Starbucks, and this one's playing out like I thought it was going to. I've talked about Starbucks for a while. And what I was looking for is, let me show you what I was looking for. Here's the uptrend line on the daily chart right there. Okay, it's clean and clear uptrend line. Up at the highs, we built negative divergence. Let me zoom in and show you that. See the negative divergence on the PPO and see it on the RSI. Let me zoom in. Here's the PPO. See how it's downtrending, making lower highs? Each time it rallies, it makes a lower high than the previous high. And yet price was continuing to move higher and higher. So price was diverging from momentum, going in the opposite direction. So then we have negative divergence in the momentum indicators. We wait for a break of trend. There's your break of trend here. We never had any follow through selling though. So that, that was a sell signal, but no follow through. So we back tested once, came down, held some support. So this is the support that really will get the short trade going all the way down here, 109.51. But you can see then they rallied it really strong, and it looked like they were going to make another back test of the trend line, but they stopped short. They didn't quite get there. Sold off. But again, the last 3 days, really impulsive rally, and it looks like we're rallying straight up into that major resistance. So I'm looking at getting short Starbucks on a back test of this trend line. We haven't quite gotten there, but we're really close. We tried to do it once before here, didn't get there, so I think we're going to get there this time. So I'm just waiting for a little bit higher prices, and then I'll be looking to establish a short. I want to short into major resistance with negative divergence. And again, this high, this was a divergent high, and then this is another divergent high. So we still have negative divergence. Sorry, guys, got people calling me. So we still have negative divergence, and we're rallying into major resistance, trendline resistance. So it's a low risk area to establish a short. You know, you establish a short right up here, and you have a higher probability of catching a good amount of downside as you position into that major resistance. You want to short at resistance. You want to go long at major support. That's the name of the game. So a little bit higher. The one caveat I want to point out is we have earnings coming up on StarBucks here on the 27th, which is next Tuesday. So right before earnings, I don't know. We're going to have to see where this price action's at. Maybe what they'll do is just kind of hang out in this area, and then on Tuesday they'll pop it right up into this resistance line, and then we'll see it start to sell off, and we can establish a short after earnings is cleared out of the way. Something to look for. Things to watch on that one. Charles Schwab, again, just continuing the downtrend. And I don't see any indication that that the downtrend is over. So you can see today selling down 3%. It's pretty much, it's just chopping around. We're selling off, bouncing higher, selling off. But in general, it's a downtrend over the last couple months, basically. Going back to June is where the downtrend really started. And we got a break of trend. Here, your sell signal came right there on June 21st. Or sorry, June 10th. And we've been downtrending ever since. So I don't see any indication that's going to end. I'm still looking for next level of support, 62.16. Still looks good. Okay, energy, XLE. So I think we're gonna get some selling tomorrow, but we'll have to see. A couple things on XLE. You've got a daily chart. You have an uptrend line right there on the daily. We also built negative divergence at the highs. So basically, we had divergent highs, negative divergence, telling us we're going to reverse trend, and we got a sell signal right there. Big gap down. Now, right after you got that sell signal, they rallied it right back up to support. And so far, they're right in that area where they're holding that support. So it can go any way. The negative divergence tells me that we're just starting a downtrend, but we got to see how the price action plays out. You'll know, it'll show you, you'll get a big sell signal or a big sell off right here, probably come in the form of another gap down. And that would likely tell you that, okay, the downtrend in oil, these oil stocks basically has just started, or if they hold this area and they can rally, then this was a bear trap or a false breakdown right there. So I don't know which way it's going to go. I'm not positioned on this one right now, but the negative divergence would kind of tilt me towards more downside. And gold, I covered the gold miners in a separate video yesterday, but I just want to cover gold bullion. Again, you can see another tag, or not quite a full tag. The buyer stepped in a little early, but we dipped down towards that 1790 support level. And just again, to cover that level, going back all the way to the last bull market back in 2011 through 2013, 2012, that was major resistance. So that's a key level. And you can see as I zoom in, there's the level right there, 1790. On the hourly chart, we just keep treading water above that level. We keep dipping it and holding, dipping and holding. The buyers are stepping in at every single moment that it dips down to that major support. So that's support, and until proven otherwise, I think we're going to hold here and start to move higher. The miners should start to move higher. There's lots of divergences in many of these miners, telling me that we're likely going to get a rally out of these miners here pretty soon. They're just building a base as far as I can tell. So they're just, they're going to basically, they're going to consolidate, and it looks like they're about to move higher. So that's all I got. I don't have anything else. If you guys are interested in stock charts, anything that you want me to take a look at, then put it in the comments below. Otherwise, leave me a thumbs up on your way out. And if you haven't checked out the course, link in the description below. Catch you guys on the next video. Bye.